call. Well, the real estate space is in focus. Sobha is the company on our radar, post its Q4 earnings. The sales value is up 7%, but the sales volume has dipped on a year-on-year basis. And of course, the big news over the weekend, the government is looking to improve the availability and price of steel and cement, a move that could benefit real estate companies. Jagadish Nangineni, the managing director at Sobha, joins us now to talk about that. Jagadish, thanks so much for joining us. First, I want to ask you your view on, the government's move to curb inflation. Steel prices could move lower, other raw material prices could come down as well. How much will this benefit an industry and a company like yours?
Thank you, Sonia, for having me on your show. If you look at from FY22 to FY21, our cost of construction has gone up anywhere between 15 to 18%, including the impending wage inflation. It is very heartening to see government actually addressing this crisis and taking these measures, and which I think will have a significant impact in terms of the commodity prices, and hence from a construction cost point of view, it probably will reduce. We'll have to see how much it's going to impact, but it will be in the range of 7 to 8% reduction for us.
Good morning. 7 to 8% construction cost reduction. So would that mean straight away a margin uptick, or would you look at using this, especially with the kind of cycle we are in and real estate seeing strong demand, perhaps some price cut as well to lure in more customers? Your thoughts?
Anuj, the price increase, the cost increases have been, some of the cost increases will be sticky, and hence I don't think there will be significant reduction in the overall construction cost. It's actually going up and it's not coming down. So hence the price increases that we have already taken and we intend to take in this financial year as well, we would like to stick to those, considering that there will be in the current cost, we have not taken into consideration a lot of wage inflation as well.
Okay, so plan for price hikes stays the same? Are you taking more price increases down the line?
Yes, Prashant. The price increases we have last financial year to FY22 to FY21, there has been an increase in about 5%. And this financial year, we have already started taking some price hikes across projects between 4 to 8%. And we'll probably look at it now that the new scenario of addressing some of the cost increases have started coming in. We can look at it from retaining some of the existing price hikes.
Okay, now Jagadish, there's been some stress in some of the startups and some of the new age companies in the last 3 months or so. Bangalore being the hub there, you'll have perhaps some sense of whether that's hurt demand. I mean, early days yet, of course, but any thoughts?
You're right. It's still early days, Anuj, and hence I think when I look at the leading indicators for the demand, they continue to be very strong. Last year, we had about 35,000 people visiting our experience centers and project sites, and that run rate seems to continue in the last few months as well. So we think that the demand seems to be reasonably strong. Okay. And which reinforces our current thinking that it is we are in a clearly up cycle in terms of the real estate market.
All right, up cycle in the real estate market. You have a fairly concentrated land bank in Kochi, a large land bank in Chennai and Hosur as well. Any plans to unlock value there?
You're right, Sonia. We have made these investments few years ago, and we are taking concerted steps towards unlocking some of these. It might take a little bit of time. We will need certain incremental investments and some patience to unlock the value from specifically from locations like Chennai, Kochi. But however, we have invested in land banks in other cities, including Bangalore, and we are taking active steps to unlock those in the form of new launches. which we will start seeing in the next couple of years.
All right, Jagadish, great to have you with us here. Thank you very much. Appreciate you joining us with that perspective here on CNBC TV18. I mean, I think it makes sense to take a quick look at the market.